What's going on, everybody? Michael Silva here. We had ourselves a very large move closing outside a 2 standard deviation, which is a very rare occurrence. If we look at a 2 standard deviation on a bell curve, you will notice that only 4 to 5% of the times it actually takes place, and we closed outside of that today. So it is a rare occurrence, a large move. We saw things like Tesla up 7%, Nvidia up 4%. All 11 sectors that make up the S&P 500 were up. Some strong moves overall. So in today's stock market brief, we want to really ease the FOMO a little bit on today's move and really prepare for some other macroeconomic data that's about to come out Thursday and Friday. What drove today's price action? Well, we had CB consumer confidence and jolts. And I mean, just looking at the chart, jolts goes down, right? So a big drop there. And we had a downtick in the consumer confidence as well. This is the Conference Board Consumer Confidence Index. And one of the things that they stated was writing responses showed that consumers were once again preoccupied with rising prices in general and for groceries and gasoline in particular. Now, it's not all doom and gloom. We did see a little bit of an uptick in retail sales. That report came out today. But as we know, and we've talked about in the past, if you look at the federal funds rate and then you look above here to a retail ETF, typically, what do you notice when rates are zero, right? When rates are smashed down and held lower for longer? Well, the market in retail goes up. And as soon as you start raising rates, it went sideways. And then we went flat again. And then what happened? Market went up. And where are we now? We're up here. And what's the market doing? It's kind of just going sideways. So what is bringing on this little bounce here? Or are we about to see a turnaround? I don't know. Could be numerous reasons, right? School, maybe just a subtle, seasonality thing. I don't know. Now, we did see a downtick here, and this kind of goes on trend with what we got last week from Michigan consumer sentiment. We did see a downtick there. Also, in current economic conditions, we saw a downtick last week. Consumer expectations, we saw a downtick last week. And the inflation expectations during that same report, same time, we actually had an uptick there as well. So, what is really going on here? It seems like bad news is good news for the financial markets as it stands at this current moment. So another part of the consumer confidence is we had perceived likelihood of the U.S. recession over the next 12 months. And what you'll notice is we actually saw a downtick there, which is, interesting because if you notice as we're seeing this downtick in the consumer confidence right here back in 2006, 2007, it kind of led us into that recession. And you can see we downticked, boom, and then this was that recession. And we've been downticking here. And during this time, you can see back in 2007, 2008, if we just look at the federal funds rate, 2006 is where we stopped to hold. And it wasn't until a year or two later where we started getting to recession territory. So is this something that, very rare, right? So we're saying that we might not have a recession, but there's other indicators telling us, you might want to be a little bit more cautious here. We have the Fed that's constantly talking about tightening, right? So if we look at their total balance sheet, right, it's still heading down at this current time. M2 money supply year over year is actually in the negative, with something that we haven't seen for a very long time. The 2-year yield, right, we discussed on a prior episode, got back above 5%. And the last time it was really there was back when the banking crisis took place, and we know what happened there, right? The banking crisis that took place, what happened? Well, we had the bank term funding program from the Fed come in, boom, it took off, and guess what? The market all of a sudden started trending back upwards. We also have a yield curve that's still inverted, the 10 and 2, the 10-year 3-month still remains inverted too as well, which are pretty good for recession indicators for in the near future. So as all this tightening has been taking place with the Federal Reserve, we know that there's a lag effect. So is this lag effect starting to kick in? Well, the data is kind of suggesting that at its current moment, but not everywhere, right? So U.S. mortgage applications, they sunk to the lowest since 1995. Are you surprised? Well, 30-year mortgage rates are also hitting highs that we haven't really seen since early 2000. Okay, Nick Timiraos from the Wall Street Journal, he said that U.S. home prices were flat over the 12 months and they ended June per the Case-Shiller, which we got today. So prices are up at an annualized rate of 5.1%. Liz Young had also posted this. The house price index was up 0.3% month over month versus 0.6% estimate and 0.7% prior, which is a 6th consecutive monthly gain. So the housing market just hasn't felt the pressure as it stands right now. Now, with all that said, and we got a big move in the markets, how are we setting up going into, well, we have Wednesday tomorrow, which there's not too many reports then, but how is this setting us up going into Thursday and Friday? Well, we have core PCE. This is an hour before the market opens, and you got to understand that these can have an effect on the dollar, on yields. These are intermarket assets that have an effect in the overall market as well, and I'll show you that. And then on Friday, we get unemployment rate, non-farm payrolls. These are market-moving events. So as we're going into Wednesday, Thursday, and Friday, what are the zones telling us right now? Well, it's telling us that the 10-year yield is coming down towards the lower end of it. HYG, which is high yield, is reaching up to the higher end of it. S&P 500 is reaching up to the higher end of it, and volatility is reaching down to the lower end of that. Now, while that's also taking place, if you look at the S&P 100, you can see that the top mega cap names, Apple, Microsoft, Google, right, Tesla, they're all reaching outside of these ranges. And if you think of these ranges as more advanced Bollinger Bands or volatility bands, is, important to know. This is something that I share with my Patreon community. So I just wanted to point out, we still have big macro coming out, and we have stuff that are moving very quickly into overbought conditions. All right, now, are you surprised that we saw a bounce in the markets? Well, I wouldn't be, because we've been talking about the possibility for a bounce to take place. So you might be thinking, well, it was the report that really drove it. Maybe that was the trigger, but the market itself was setting up for a bounce. It just needed the catalyst. So as you know, we've shared this. This is the percent of stocks above the 20-period moving average. This is something that I shared on the Twitter on August 17th. And you can notice the percent of stocks above the 20-day moving average and all these various different assets, right? So S&P 500, 600, which is small cap, mid cap, 1500, that's the total. S&P 100, Dow Jones, NASDAQ 100, the NYSE, the NASDAQ, you can see they were all pulling down into kind of oversold territory. And where are they right now? Well, they're starting to bounce. So you should not be surprised that we're seeing the bounce in the overall markets. But does that mean that everything's all fine and dandy? Well, maybe not, and we're gonna get into some key levels momentarily. I want to show you also the BP chart, so BP SPX chart, right? This has been an oversold, and oversold can stay oversold, just like overbought can stay overbought. But I promise you, there will come a time where we get back into overbought conditions from oversold conditions. So we're starting to try to move out of that as it stands currently. And one thing that I always like to watch for is the possibility for a positive divergence. So if this were to come down, say if we do get a report or inflation is lower, that could be potentially bullish, right? Because the Fed can keep rates where they're at. But if inflation comes in a little bit hotter than expected, that could be bearish for the markets, driving the markets potentially down. Now, bullish percent for the NASDAQ composite, it's moving out of oversold conditions. The NYSE, right? That's kind of trying to work itself out right now. The INDU, the Dow Jones Industrial, is still in oversold conditions. The NASDAQ 100, you can see, guess what? It's starting to come out of that oversold condition. We also have been talking about gold miners as a potential bounce. They're still in oversold conditions. Discretionary, right? We saw some moves in discretionary names today, obviously, but it's still in oversold conditions. Even the technology sector, right? This was highly oversold. We talked about the bearish divergence, and guess what? It played out to the downside. Oversold. Now it's working those oversold conditions off. While all this is taking place, the summation index is still trending down, and the parabolic SAR is above it. We were very oversold conditions on the NASDAQ McClellan oscillator, and we're seeing a bounce. Okay, the NYSE summation index, still, it's starting to turn a little bit, but the parabolic SAR is still above it. We were very oversold. We're starting to see a bounce. If you look at the old fool indicator, we're actually still at a bearish crossover. So this would have to take some time to get back above to be a little bit more bullish there. That's a much more lagging indicator, but it can identify changes in trend. As you can see, the bullish crossover was right here, and we saw a nice big move. Now that's a bearish crossover, and we're starting to see some bearish momentum and a little bit of a bounce. Okay, so when those macro report comes out, there's a couple assets to pay attention to. One being the dollar, right? Markets were up big. Are you surprised that the dollar was down? Fairly decently sized today. It's working off already a pretty strong move, and it's kind of just been going sideways. But today's day, a pretty large candle to the downside. Look at the S&P 500s. Okay, and look at golds, right? We've been talking about gold coiling up here too, and bam, it blew off to the upside. Now, does this mean you chase it here? Not necessarily. I personally like to wait for consolidation. We talked about it here on this day. right here. You can go back and watch. We said I wouldn't chase it, wait for a consolidation or pullback. Took 2 to 3 days, it consolidated, pulled back, and boom, then we had our follow through. The 10-year yield also got hit, and this is pretty good for growthy names. So coming into these macro data reports, and we know that, we can be affected, a 10-year, the dollar, they can be affected. Well, as we're coming into, core PCE, understand as we're moving into there, the 10-year yield is nearing its lower end. TLT, bonds, right? We'll use that as the proxy, is moving it to its higher end. So it's actually setting itself up for a potential reversal, which could be technically bearish for the market. So I wanted just to kind of note that. Doesn't mean it's going to happen, but it is something to note. Now, we also know silver, right? This was getting oversold, and we overlay the GDX, which is in black, to silver, and you can see it tracks itself really well. So as silver was moving higher and, miners were kind of just stuck in place, we thought that as a potential opportunity, and you see a nice little move there. Once again, these aren't moves that I'll necessarily chase. Well, on these big moves, we say wait for consolidation, wait for consolidation. Well, we got that follow through today. Even oil was up as it was pulling back into this golden cross area over here. So if inflation expectations are rising, and we think inflation is going to kind of move higher, well, oil could be a potential trade to play back up to around 85 where we saw prior resistance. So energy names could be some to look into. Okay. So with all that said, we got a lot of data coming out. We're going to hop into the S&P 500 and give some updated levels here too as well of what to expect from just a price action perspective. And one thing is we can take a look at the DEX, and we showed this yesterday. DEX is just the daily sum of deltas from options flow across the entire market. And what it's telling us right now, right, it was green, right? So it basically means delta is positive. So there's more of a bullish bias. But does that mean you just go long and kind of just close your eyes? No, you have to wait for price action to really firm up and show the opportunity and have it offer good risk to reward. Okay, so we do have a positive delta, so there is still a bullish bias. And then if you look at the SPY gamma exposure levels, we're right around these levels. This is about the 450 level. And really, there's not much going on above us. Okay, so that's important to note. So 450 is going to be an important level to really try to get over. And if I bring up this chart again, which we shared yesterday, right, we had 446 was the key level to watch. Well, it changed a little bit. The structure changed a little bit. Now we have that bigger level at 445, which is this level right here. And this could potentially act as a magnet if we can't get right through the 450. Now, I want to note this 450 level, we discussed that if we were to get above 446, price action were to kind of move around sideways, this here, right, as we're moving towards it, right, this can potentially act as a level where it assists the move. And to give you more of a visualization of that, you can take a look down here at gamma and think of this level right here as that 450, right? So if you think of this as the 450, what happens is price moves close to it. Well, the move accelerates to this pinning point or to this exposure level. And when it gets there, right, that's not when the move takes place. It takes place as we move to those levels. Okay, so through 446, we had a pretty strong move, and it floated right to where that 450 pin right there. So coming into tomorrow, you'd want to watch out for this level. If it kind of get hung around there, if it gets hung around there or gets rejected, we want to look at 445 beneath us. Now, if we look at the 15-minute time frame, we discuss an inclining 5-day moving average, price actions above it. We had a positive DEX, bullish, okay? That was a bullish bias. Now, we're above the 5-day moving average. We have a bullish DEX, right? It's a bullish bias, but that comes with a caveat. What's the caveat? The price action went straight up already. It's a very strong straight move. So would you chase this move to potentially go a little bit higher? I mean, perhaps that might be your, goal. My goal, what I do, because you can't just really, predict where it's exactly going to go, I sold into some of this strength. I'm leaving some runners on just in case if it does, and I'm not necessarily looking to short the strength. Now, what I will look for is periods of consolidations or pullbacks. So what are some levels to pay attention to? Noted that we are outside of the weekly expected move, and 68% of the time we close within there. And now that we're outside of it, right, dynamic hedging takes place, more buying gets more buying, and we can get that squeeze. But if price action starts pulling back, right, 446 And the lower daily expected move is around that 446, which happens to be right around that 445 level, right? That pin. These could act as potential levels of support. So if we pull back into this area, as the month to date could potentially start turning up, the week to date anchored VWAP is turning up, the 5-day moving average is starting to turn up, price action might form a potential bull flag, very similar to what we saw here, and we could play it to the upside and outside if that is going to be the case. Okay, but I would not be a one to chase this type of move heading into a big macro data report. I want consolidation. I want some sort of a pullback. Remember, we're above the 5-day moving average that's starting to incline, but we didn't digest this move yet. The move was straight up. So if you get here and you get a little lucky, congratulations. But there will come a time where we get a consolidation like this, or we get a pullback like that. And we'd be bullish as long as we're holding above an inclining 5-day moving average. Now, price action squeezed a little bit higher. There is a negative divergence on the RSI in that overbought condition there too as well. So just be aware of that coming into tomorrow's trading session. We're back above the quarter to date anchored VWAP. So as we're back above all these key levels, look to see if they hold as support as we pull back down or consolidate. That's all I got for you on today's episode, everybody. It was a lot, but hope it gets you prepared for heading into this potential wild week up ahead.